We're here in Monte Carlo for the Rendez-Vous de Septembre. For Invest TV, I'm Richard Banks. And I'm joined now by Mark Cloutier, Chairman and CEO of Aspen. Mark, welcome.
Thank you. Good to see you.
So we're here in Monte Carlo, a lot of talk about the market cycle, a hard market, and many people are saying, but hard markets typically don't last as long as soft markets. Can you tell us a little bit about what Aspen's doing to manage the cycle, to maintain the relationships, and to build for the future?
Sure. First of all, long may the hard market live. And, we can get into that conversation as a sort of a separate discussion. Look, when we undertook the work that we've been doing to drive some change at Aspen, we really focused our attention on lines and classes of business and trading relationships that had performed very, very well for the business across many years. And so we are now in the market trading with very, very long-term trading partners, deep trading relationships. And so we're just simply continuing to nurture those. We believe that the work that we have done to reposition the performance of the business has tested those relationships, because we clearly had to withdraw from some lines of business, while we were asking those same supporters to grow with us in other parts of our business. So the relationships that we have really endured through the challenging time of repositioning the business. Our trading partners know that we're committed to the businesses that we're in now, and that we will work with them across the cycle, that we're not going to run away from a class of business when it hits the more difficult or less attractive, if you will, trading time. The other thing that we're doing is, if you've followed us, we've been growing our capital markets business. We've been bringing additional capacity to our trading partners through that mechanism to help strengthen those trading relationships. And so I think all of that, the long-term nature of the trading relationships we have, frankly, the tests they've been through as we've repositioned the business, and then just the way we've been trading forward now, I think will give us that ability to work together through the more challenging times.
So when people talk about a hard market, they tend to talk about it in absolutes, but it's clearly not a hard market in all lines of business. How do you think about capital allocation and the lines of business that you wanted to write?
Sure. I mean, probably a reasonable example of how we think about that is and of all people pointing to this, why would I, would be even our half-year results, where you see that our top line was flattish, shall we say that way. Look, we know it's not as broad a hard market as it was, say, in 2021, 22, that through 23 we've seen rate movements, deterioration in some lines and classes of business. Again, we're not going to withdraw, but we're going to risk manage where rate is moving, and understanding maybe a little less about, understanding rate movement, but really understanding rate adequacy. And so, we don't overreact necessarily and lean in heavily when rates go up until we understand whether they're adequate or not. And we won't sort of run away from business when pure rate starts to decline, because it may be very adequate for a long time. And that's where that stickiness in the trading relationships that I just referred to would come from.
So an important part of the component of the reinsurance industry is the investors, and we're hearing more about investor appetite. Can you tell us a little bit about your perception of investors' attitude towards the reinsurance business?
I think that what we're finding in sort of our exploration of capital markets is there is now a strength of investor appetite for the business. The recent trading history of the business, the market broadly is hitting decent returns for investors. So I think right now there's support. I think we need to, as a sector and as a broader market, we need to behave in a way that shows that support is we're worthy of that support. And I think that historically it feels sometimes like this business almost doesn't like to give its investors great returns for extended periods of time. I'm not sure if that's a way of putting it, but I think there's a lot of support there today. So long as we continue to conduct the business, I think the way the market is trading today, I believe that support will be there, because I think there's a chance that investors will be able to get the type of returns that they should be getting for onboarding all of the uncertainty that we're onboarding today.
And that relates both to the traditional reinsurance and insurance business and perhaps some of the capital market focused businesses that you touched on earlier.
Yes, I mean, we're finding a lot of interest in other than cat in the capital markets side of our business. And so, and that is for both insurance and reinsurance risk. We're finding the capital markets investors on the sort of our Aspen capital markets business, we're finding those investors to be becoming somewhat agnostic as to whether it's insurance risk that's coming in, how it comes in. It's the nature of the risk, the predictability, and obviously the performance of the portfolio that we construct, more than is it insurance or is it reinsurance. And I think there was initially this barrier that, well, it's reinsurance risk that goes into capital markets. I think we've kind of shown that it's risk.
Yeah.
And if we can get the right returns, the support will be there.
And investors understand that. They understand the
very much so.
Yeah. Great. I wanted to ask you about the culture at Aspen. Culture seems to be the heart of what you're building at Aspen. Tell us a bit about why that's so important.
We want Aspen to be a healthy business in every respect. The financial performance is one aspect of a healthy business. Good financial performance is an enabler to us, building other elements of the business into great healthy condition. Generational changes and attitudes that have shifted over the years sort of lead you to, if you're really thoughtful about this, to, I think, the conclusion that for business to truly succeed and trade forward for the long term today, you have to have the right mix of performance expectation, but also a culture that enables collaboration, enables sort of the empowerment of people and technology and data together, that understands its place in its community and does its part to not just take from the community, to make sure that it really contributes to the health of the community. And you get that through culture. You get that through embedding into the business a sense of community with common shared values of sort of that integrity, friendliness, and a sense of social responsibility, environmental responsibility, all those things that are important. Businesses should be contributing to the community, the various communities that we're in, and you have to build a culture to support that, so it becomes kind of universal in the business. So in my mind, sustainability of the performance of the business, it's critical to have a culture that gives the business sort of the longer term sustainability.
Mark, thank you very much indeed for joining us.
It's been a pleasure. Thank you.
For AM Best TV, I'm Richard Banks.